Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's July the 24th, 7:35 in the morning. Thank you, Sensei, for a great show on the breakfast show, the pre-show. Now it's time for the ECB rate decision. Rate cuts, rate hikes. I can tell you it's a pause already. A little spoiler there, but we want to get the tone of where the markets are going. And of course, today's a huge day because not only do we have the ECB rate decision. I'm going to cover that live for you now. But then after that, we also have a special on XRP and Bitcoin. I've been buying heavily overnight, looking at the yen carry trade, what the deal with Japan means, what the deal with Europe means, giving me more confidence or less confidence to buy Bitcoin and XRP, also buying more of the S&P 500. So what do you make of all of that? That's all coming up afterwards as well. And then we also have live, we have the reaction from Trump visiting the Fed, all of that, plus more earnings. I mean, it's just jam-packed at the moment. So let's get straight into it. We've got just a couple of minutes before the stream goes live to give us the feed for the ECB rate decision. We're going to pick that up and we're just waiting for it to come through. We've got about 7 minutes, and I can tell you now that certain providers are doing a rubbish job with their thumbnails. But anyway, there you go. It's on its way in just a few minutes, so stand by. So just tap the like button if you are enjoying this stream, and consider subscribing. If you become part of our subscribers on the way to 100,000, you will be in a big party we're planning. So be part of it. If you're not, if you miss it, or members as well, you get a special event as well. If you want to be a member, by the time we're at 100,000, there's going to be something special for all of you. So how close are we to 100,000 subscribers? Let me show you on the screen. It's getting pretty close right now. Let's have a look. There's our XRP. I was buying big last night during the night, and it's paid off already, which is nice. But anyway, let's have a look at our subscribers. 92,512. Slowly there today, a bit of a quiet day, but these rate decisions are not always that popular, but they are important. I like to cover all of these events. You need to know what's going on in the market to make money. You can't just guess. And people just like to guess on things. Okay, let's get ready. We've got 6 minutes to go, so we're just on standby. Let me come to all the comments and questions. Oh, well, before I do, let me give you all the links. There'll be lots of snippets today, highlights, things taken from the presentation, things that I think are important, things that I think are noteworthy, and that you might want to follow on X. I post them on X. I do post sometimes on Instagram as well. There you go. If you want Alpha Spread and Seeking Alpha, our trading software, you can get that with discounts, free trials, so on and so forth. So there's all of that. If you want to become a member and be part of this before we get to 100,000 and be invited to the special 100,000 subscriber party, there is a link. If you are on an iOS device, you will need to select a browser and a desktop version to get it. And if you want our free training video course, we have that as well. There is Discord for you. It's provided for free in our Discord Premium. Discord Premium is $2.99. We could charge 10 times that, or maybe not 10. Yeah, we can actually, but we decide to do it as cheap as possible so everyone can afford it. And we give you for free the training course we added afterwards. So if you want that, you just got to click on the Discord and purchase for $2.99. If you do the free version, you won't see anything. Those channels will not open up for you, and it'll just be wasting your time. All right, if you want some free stocks from Robinhood USA, there we go. Free stocks from Robinhood UK, there we go. Right. Also, I'm going to give you... Yes, I've got it pinned at the top. The next event, that is the XRP Bitcoin yen carry trade special I'll be doing. But you might want the newsletter. Let me give you the newsletter. Every morning we have our newsletter. It's our show notes, and you can get it a free trial of that as well. There is the newsletter. This is the event coming up this morning after the ECB. I'll be covering this. This is the There's a poll running. You can see here if you want to vote. Are you bullish? Are you bullish enough to buy now it's falling? We're talking about XRP. XRP has gone political. There it is. So what do you make of that? In fact, I've just got an idea. I've got 4 minutes. I think I can do it. Let me be really quick. Oh my gosh, this will take some skill. This will take some skill. Let me go on here. Bloody hell. All right, here we go. You ready? Okay, I'll try and do this now. XRP, are you even more bullish now, or are you bullish enough? It's gone down. I'm covering this later on this morning after my European Central Bank rate decision. I've been buying heavily into Bitcoin and XRP to be able to give away to you in competitions. But I want to get it now while it's falling. But it's got a lot to do with Japan. Yen carry trade. I'll break it all down. It's become political. Join me in just a few minutes' time after the ECB exclusively on YouTube. Links are below. That's it from me. I'll see you back on YouTube very, very shortly. Ta-ra for now. Okay, I've got 3 minutes. I just managed to get that done. So that was tight. Now I'm going to go to X and I'm going to post that. Bloody hell, look at that for speed. See that? Hopefully I've just got that. All right, here we go. Okay. How long have I got now? 3 minutes. Look at that. How about that, everybody? XRP. Are you bullish now to buy? I have some XRP Ripple news. 3 minutes. It just got political. So XRP Ripple Japan and tariffs. I'll show you what I'm doing. Just so you see what I'm doing. Tariff. Okay, I think that, Trump as well. Okay. Sensei. eVTOL hub. Live today, and the event I want to cover is this one. There we go. Boom. How long have I got now? 1 minute. Okay, and I think that's it. Post. Bloody marvelous. All right. Okay, I love it. So let me come back to here. Right, we're currently recording. We are live. We've got the feed hasn't started yet. Let me refresh the screen. They're saying they're waiting. Yeah, we're on waiting mode. So I shall keep I'll keep my eye on that, waiting for that. So stand by. If you just arrived, please tap the like button and consider subscribing. If you want to go and comment on that post on X, if you are bullish on XRP, even more now. It's gone down. I am even more, which is the opposite to most people, I guess. Click the link there in the chat and go and join us on X, and you might leave your thoughts there. All right, rock and roll. So we're waiting now. We're going to turn the studio red. We are red. ECB meeting. We're waiting for Bloomberg to give me the feed. Upcoming. We're on standby. I'm going to double check my backup feeds just in case. You never know with these things. They sometimes move around and you have to be ready to go. Who's going to cover it first? We're just waiting for the feed to come through. Yeah, they have an agreement. There's a pool. They all decide who's covering these different things. You tend to find Bloomberg cover ECB. They'll be live in a minute. We'll have the rate. We'll have the information. Come on, whenever you're ready. I've got it all set to go. Now then, while I'm waiting for that, I shall do some work over here. We're waiting for that decision. Well, we know what the decision is, but it's the tone. And we want to cover that, and then we'll go into our XRP special after that. All these events will take you one after another. So, little spoiler alert. So during the night, I'll go to my crypto. You can see I've been buying heavily into XRP while everybody's been selling it. Now got $9,900. I had nothing a week ago. I've now got 9,900. And when everyone started dumping XRP and Bitcoin, I started buying it because I can give it away. It's my competition fund, so to do giveaways. So I want to buy it when it goes down. So when it goes up, the $1,000 cost me less. Kind of makes sense, right? It's good investment, isn't it? Anyway, so I got more bullish, and I'll explain that why on the show later. All right, let me see if I can upload this. Upload this. Well, we're waiting. We're still in a wait and see mode at the moment. Okay, so we're on standby. So we're just waiting for the ECB event to start. I've got my stream on standby, and we're still... Oh, here we go. They sent us for the feed. Here we go.
Medium-term target. The incoming information is broadly in line with our previous assessment of the inflation outlook. Domestic pressures have continued to ease, with wages growing more slowly. Partly reflecting our past interest rate cuts, the economy has so far proven resilient overall in a challenging global environment. At the same time, the environment remains exceptionally uncertain, especially because of trade disputes. We are determined to ensure that inflation stabilizes at our 2% target in the medium term. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook and the risks surrounding it in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. The decisions taken today are set out in a press release available on our website. And I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. In the first quarter, the economy grew more strongly than expected. This was partly because firms front-loaded exports ahead of expected tariff hikes. But growth was also bolstered by stronger private consumption and investment. Recent surveys point to an overall modest expansion in both the manufacturing and services sector. At the same time, higher actual and expected tariffs, the stronger euro, and persistent geopolitical uncertainty are making firms more hesitant to invest. The robust labor market, rising real incomes, and solid private sector balance sheets continue to support consumption. Unemployment stood at 6.3% in May, close to its lowest level since the introduction of the euro. Easier financing conditions are underpinning domestic demand, including in the housing market. Over time, higher public investment in defense and infrastructure should also support growth. More than ever, the Governing Council considers it crucial to urgently strengthen the euro area and its economy in the present geopolitical environment. Fiscal and structural policies should make the economy more productive, competitive, and resilient. Governments should prioritize growth-enhancing structural reforms and strategic investment while ensuring sustainable public finances. It is important to complete the Savings and Investments Union and the Banking Union following a clear and ambitious timetable, and to rapidly establish the legislative framework for the potential introduction of the digital euro. The Governing Council welcomes the Eurogroup's commitment to improve the effectiveness, quality, and composition of public spending, and supports the efforts by European authorities to preserve the mutual benefits of global trade. Annual inflation stood at 2% in June, after 1.9% in May. Energy prices went up in June, but are still lower than a year ago. Food price inflation eased slightly to 3.1%. Goods inflation edged down to 0.5% in June, whereas services inflation ticked up to 3.3% from 3.2% in May. Indicators of underlying inflation are overall consistent with our 2% medium-term target. Labour costs have continued to moderate. Year-on-year growth in compensation per employee slowed to 3.8% in the first quarter, down from 4.1% in the previous quarter. Combined with stronger productivity growth, this led to slower growth in unit labour costs. Forward-looking indicators, including the ECB's wage tracker and surveys on wage expectations of firms, consumers, and professional forecasters, point to a further decline in wage growth. Short-term consumer inflation expectations declined in both May and June, reversing the uptick observed in previous months. Most measures of longer-term inflation expectations continue to stand at around 2%, supporting the stabilization of inflation around our target. Turning now to the risk assessment. Risks to economic growth remain tilted to the downside. Among the main risks are further escalation in global trade tensions and associated uncertainties, which could dampen exports and drag down investment and consumption. A deterioration in financial market sentiment could lead to tighter financing conditions and greater risk aversions, and make firms and households less willing to invest and consume. Geopolitical tensions, such as Russia's unjustified war against Ukraine and the tragic conflict in the Middle East, remain a major source of uncertainty. By contrast, if trade and geopolitical tensions were resolved swiftly, this could lift sentiment and spur activity. Higher defense and infrastructure spending, together with productivity-enhancing reforms, would add to growth. An improvement in business confidence would also stimulate private investment. The outlook for inflation is more uncertain than usual as a result of the volatile global trade policy environment. A stronger euro could bring inflation down further than expected. Moreover, inflation could turn out to be lower if higher tariffs lead to lower demand for euro area exports and induce countries with overcapacity to reroute their exports to the euro area. Trade tensions could lead to greater volatility and risk aversion in financial markets, which would weigh on domestic demand and would thereby also lower inflation. But by contrast, inflation could turn out to be higher if a fragmentation of global supply chains pushed up import prices and added to capacity constraints in a domestic economy. A boost in defense and infrastructure spending could also raise inflation over the medium term. Extreme weather events and the unfolding of climate crisis more broadly could drive up food prices by more than expected. So looking at the financial and monetary conditions now. Market interest rates have increased since our last meeting, especially at longer maturities. At the same time, our past interest rate cuts continue to make corporate borrowing less expensive. The average interest rate on new loans to firms declined to 3.7% in May from 3.8% in April. The cost of issuing market-based debt also came down, falling to 3.6% in May. While the growth rate of loans to firms moderated to 2.5% in May, corporate bond issuance was stronger, growing at a rate of 3.4% in annual terms. Credit standards for business loans were broadly unchanged in the second quarter, as reported in our latest bank lending survey for the euro area. While banks' concerns about the economic risks faced by their customers had a tightening impact on credit standards, this was broadly offset by stronger competition among lenders. Meanwhile, firms' demand for credit increased slightly, benefiting from lower interest rates, but they remained cautious because of global uncertainty and trade tensions. The average interest rate on new mortgages has barely changed since the start of the year and stood at 3.3% in May. Growth in mortgage lending edged up to 2% in May in the context of a strong increase in demand, while credit standards tightened slightly in the second quarter. So in conclusion, the Governing Council today decided to keep the three key ECB interest rates unchanged. We are determined to ensure that inflation stabilizes at our 2% target in the medium term. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. Our interest rate decisions will be based on our assessment of the inflation outlook and the risks surrounding it in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. And in any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation stabilizes sustainably at our medium-term target and to preserve the smooth functioning of monetary policy transmission. And we are now ready to take your questions.
And the first question goes to Annette Weisbach of CNBC. Annette, please.
President Lagarde, thank you for taking my question. The first one is on the euro exchange rate. So we've heard from your dear colleague, the Vice President, Luis de Guindos in Sintra, that anything beyond 120 might be complicated. So what's your assessment? When does it start to get complicated, and when do the deflationary effects from that higher euro do start to worry you? Second question is on the tariffs. If we were to get that 15% trade deal with the United States, is that according to your baseline, and would that lift the uncertainties in a way which is good enough for the euro area to grow? Thank you.
Thank you very much for your twofold questions. Let me just tell you that in relation to exchange rate, we do not target any exchange rate. Second, we monitor exchange rate indeed, because exchange rate matter for our inflation forecast. And I'm here quoting my dear friend, colleague, Vice President, who said recently, we take into account exchange rate to forecast inflation. We are exactly on the same page in terms of our message regarding exchange rate. Your second question had to do with conjecture as to what will be the outcome of ongoing trade negotiations. And I know that there was a newspaper yesterday who sort of hinted that we were at a particular closure. It was a closing in, not a closure, right? And required very careful reading. We are attentive to where the negotiations are heading. We are not in a negotiating position. We are operating on the basis of the work that we do to forecast, to anticipate. We have a baseline on which we are basing our decision of today, which is our June baseline, which holds. You know, that baseline is generally confirmed by all the recent data that we have received. But we take things one day at a time. We decide meeting by meeting, but we take news one day at a time. And for the moment, we are relying on our baseline, relying on the scenario that we have done back in June, which we have published, which you all have had a chance to look at, and that's what it is. But one thing I will add to that is that the sooner this trade uncertainty is resolved, so I think we use the word resolved swiftly, so the sooner it is resolved, the less uncertainty we will have to deal with, and that would be welcome by any economic actors, including ourselves. Thank you.
Next question goes to Alex Weber of Bloomberg. Alex, please.
Good afternoon. Thank you very much. I've got two questions on your statement. So you highlight the resilience of the economy so far. Mm-hmm. Does this resilience reduce the need to deliver another rate cut in the autumn, even if this was part of the baseline scenario in June? And the other question is on your reaction function. So you added that future decisions will also be based on the risks surrounding the inflation outlook. Could you just explain why this addition was necessary? Thank you.
Sure. Thank you very much. And thank you for noticing the addition. You're right. So I'll start with that one. As you know, we concluded our strategy assessment. We had a strategy review that we concluded in 21. We had committed to review that strategy on the basis of new economic development and certainly in view of the process through which we had gone, namely facing those incredible shocks and going full cycle in many ways. So we did that, and as a result of that strategy assessment, it was determined that we had to amplify, enhance, and probably give a slightly higher focus to risk assessment. And obviously scenarios, sensitivity analysis are part of that exercise that is conducted on a regular basis, that is published occasionally, but conducted on a regular basis. But it is certainly very opportune that this focus on enhanced risk assessment is agreed at a time when we have a higher level of uncertainty. So that's the reason why it is. You have the usual risk assessment section in our monetary policy statement, which focuses on growth and inflation. And we thought it was appropriate, given the enhanced focus that we want to give to the measurement of risk, the assessment of risk, to have actually that element included in the first part of our monetary policy statement. You know, we are, I'm going to repeat myself, we are in a good place. And we are in a good place because inflation is at 2%, but we're not focused on data points. We're looking at all sorts of data, and our target is the medium-term inflation, which is at 2%. So I'm saying that we are in a good place because our projections point to inflation stabilizing at target in the medium term. As you will remember, I have often mentioned the importance of wages wages are heading in the right direction and are showing this downward trend that we were expecting. The unit profit is continuing to buffer in a little bit of that wage increase, which is the natural result of an element of catching up and adjusting to the development of the economy. And we have seen, and I'm coming now to the specific point of your question, we have seen growth developing in a relatively favorable way. Of course, if you look at Q1 in particular, we will have Q2 in a week's time. But if we look at the numbers we have, Q1 was a surprising 0.6%. Now, of course, because we like to look under the hood, 0.6% is partly attributable to Ireland. And then if you look at what was actually driving this growth increase, it's partly front-loading because economic operators anticipated the rising of tariffs and decided to front-load. But it's not just front-loading. It's also increased consumption and increased investment, and not only attributable to Ireland, which is often an outlier for all sorts of intellectual property reasons and what have you. But so growth is developing mostly, if not a little better than in line with our expectations. So we are looking at development. As I said, last time around, we are now confident that the inflationary shock of the past few years is now behind us. And our job now is to look at what's coming and to try to, first of all, wait, because there is a lot of elements that will pan out in the next few months, and see what impact it will have on our economy. Thank you.
And the next question goes to Balázs Korányi of Reuters. Balázs, please.
Good afternoon. Thank you for taking my questions. Two, of course. The first is about the risk of undershooting the target. Talking to some of your colleagues and reading more economist notes, it seems to me that there is a greater discussion about undershooting. In your discussion today, was there anything about this? Do you think over the last 6 weeks, the risk of below target inflation has increased? The other question is about the scenarios you published 6 weeks ago, and especially the more severe outcomes, which seem to suggest that even in case of retaliation, the whole package would be disinflationary. Now, I'm curious, is there consensus in the Governing Council about this, or is there perhaps still a discussion that such a scenario could turn out to be inflationary rather than disinflationary? Mm.
Well, thank you for your two questions. Concerning the risk of undershooting, I just want to remind you and colleagues that we are at 2% latest reading, but more importantly, because that's what we have to look at, we are at 2%, which is our medium-term target. So is there a risk of undershooting? There is actually a forecast of undershooting in 26 for all sorts of base effects reasons and consequences that we are forecasting today. But as has been mentioned by some of my colleagues in their various speeches, we are not going to be moved away by some minor deviation. And we are looking at the medium-term targets that we have. And we will proceed on the basis of that 3 elements to determine our monetary policy stance. So that is the result of our strategic assessment, but it's also the approach that we are taking inside the Governing Council. Now, you will always find 2 or 3 governors who are very concerned about the undershooting. But what I say to you is undershooting is actually in our projection, in the staff projection. It's there. But what matters is our medium-term target, because this is the objective that we have reaffirmed in our strategy, and which is definitely 2%. And when I look at my inflation expectations, it is strongly anchored around 2% in the short term, but also in the longer term. So that's as far as undershooting is concerned. Now, we have conducted that exercise with our scenario, and as you know, we have this sort of rosy scenario where everything is at zero, it's perfectly symmetric and reciprocated. We have the baseline, which is at 10%, which is the current rate that the economy is taking in, and we have the 20%, which is the severe scenario. Some of those scenarios have retaliation measures, not all. And I think that as we observe the interesting negotiations and what leaks out in various forms, retaliation is optional, doesn't seem to be a definite element. But the ultimate net-off result in terms of inflationary forces or disinflationary forces cannot be determined at this point in time. Why is that? Because it's a very complicated set of factors that we will have to analyze, take into account to determine what the impact will be. We currently have a list of different rates. You have the hypothetical 10 or 15 or X%. We have some sectoral rates as well that apply to either the automotive industry or the steel and aluminium industry, a big question mark on pharmaceutical. And to add to that complexity, you also have the indirect impact on our economy of tariffs that are decided in relation to other countries that will induce some redirecting or rerouting, which themselves will have an impact on our economy. For the moment, we assume that this impact will be inflationary, and staff has worked on that. But equally, and this is very difficult to assess for the moment, there will probably be some bottlenecks issues as a result of the trade disruption. There will probably be, just as there will be some rerouting and redirecting, there will be some supply chain significant changes. And that will have also an impact on inflation, more likely to be inflationary than disinflationary. So it's not just, trade one way, retaliation in response, but it's also the rerouting, the redirecting, the supply chain disruption, the bottlenecks that will all come together to impact prices. Now, the next question you have to ask yourself as well, and that we are asking ourselves and will be asking, is that going to be a level effect? Is that going to be an ongoing consequence of a new paradigm? There is a lot of uncertainty out there. We are mindful of all that. We are going to monitor, factor in, model as much as we can. But at this point in time, conclusion is not, in my view, definite as to which of those forces will prevail.
Next question goes to Isabella Bufacchi of Il Sole 24 Ore. Isabella, please.
Thank you for taking my question. Good afternoon. My first question is on tariffs and interest rates, in the sense that the Federal Reserve would have cut interest rates if it weren't for tariffs, and Chair Powell said in Sintra, we went on hold for tariffs. Can you explain how far is the ECB today on hold because of tariffs? And my second question there again has got to do with the United States again, because Donald Trump called the signing into law of the Genius Act on US dollar-backed payment stablecoins a giant step to cement American dominance of global finance, the greatest revolution in financial technology, and secures the dollar status. But on monetary policy, there is a concern that the growth of stablecoins for trillions would have an impact on the short term rates in the United States because of how much T-bills is going to be used as a peg to the stable coins. So there is a big debate on impact of this on monetary policy, on central banks, and I wonder if you can say, if you share these concerns of these innovations on monetary policy tools. Thank you.
Well, thank you for your two questions. I think it's a good expression that my colleague and friend and esteemed central banker has used to refer to being on hold. So we ourselves at the ECB, we have left our rates unchanged, and you could argue that we are on hold. We are in this wait and watch situation, and any monetary policy decision will, for the future, be decided on the basis of data, will be decided meeting by meeting, is not predetermined by any particular path. And I think that the jury is out as to how quickly the uncertainty will be cleared under present circumstances. So a large part of that uncertainty is itself caused by trade and tariffs, as well as non-tariff barriers, by the way. It's tariff barriers and non-tariff barriers, which obviously matter. That has an impact. The uncertainty in and of itself is also playing a role in relation to the level of risk that we see. So it's trade-related, caused by tariffs and non-tariff fear or expectations, depending on how you look at it, and it's the overall uncertainty about the outcome, which obviously induces different behavior on the part of consumers and investors. Look, on the Genius Act, first point I would make is that having a legal framework is helping understanding what the risks, benefit, and prospects are for these instruments. Number two, I think that it's a little bit early in the process to really have a clear and good understanding of what the consequences will be. Number three, we have to be focused on what we do here at home in Europe. We have to make sure that we are strong in terms of currency, issuance, protection. We are the curator of the euro, and we are ultimately focused on that. So, of course, we are mindful of what's happening elsewhere, what the dangers could be, but we have to make sure that at home we take all the necessary measures to protect and preserve our currency. And in that respect, we are very decisively focused on developing the digital euro and doing everything that we can to be on time and prepared to make this digital form of sovereign money available in the shortest possible time, which doesn't mean that it's going to be tomorrow, rest assured. And cash will always be there, and banks will be part of the game and will be intermediary in the process. But our duty is to make sure that as Europeans' preferences evolve over the course of time, the digital euro is a possible reality. Thank you.
And now Olaf Stolberg of the Financial Times. Olaf, please.
Thanks. I do have two short questions. One is on this interview Isabel Schnabel gave a few weeks ago when she said that the bar for further rate cuts is very high. Do you share that view, or do you have a different view on that? And my second question refers to views expressed by analysts who said that if the trade tensions will be resolved quickly, the question could relatively soon become when the next rate hike will happen rather than the next rate cut in the euro area. Do you think that's a relevant framework at the moment, or is this not relevant from your point of view? Thanks.
Well, thank you for your two questions. You know, each and every executive board members and each and every governor has their preference and their views. And I think it is the beauty of this institution to allow for diversity of viewpoints and for allowing the expression of those viewpoints. Now, my job as president of the ECB is to harness all the views of the Governing Council members, and on the basis of our staff work, projections, proposals, to elicit as large a majority view as is possible. That's my job, okay? So what I can tell you as far as today is concerned is that the decision to keep interest rates unchanged was a unanimous decision. I can also tell you that the risk assessment, which is nicely spelled out in the monetary policy statement, was broadly shared by members of the Governing Council. Now, as to future path, I think it's also widely shared by members of the Governing Council that we have to work on the basis of the data as they come in, that we have to decide meeting by meeting, and that to predetermine a path or preset the level or the material and significant development that would trigger one thing or the other is prospective and not part of the job that I do. Okay? I think my response is clear enough. Look, if trade tensions are resolved in short order, it will clear some of the uncertainty that we have weighing on the decision-making of consumers, of investors, of enterprises, and it will, of course, help us as well anticipate and model what the outcome of those tariffs will be. Could it lead to different movements? Future will tell. Our work will tell. I would not exclude anything, for sure. Thank you.
Next question goes to Santi Pignol of Market News International, MNI. Santi, please.
Thank you. Good afternoon, Madame Lagarde. My question is, we are now less than a year from the time when reserves are expected to slip from excess to ample. My question is, are you happy that banks are in a position to deal with the reduced reserve? And is the ECB happy that all the tools are in place for any early signs to stress in the interbank market? Thank you.
Yeah, I suppose you're talking about liquidity and the volume of liquidity. Yeah. Well, first of all, there is still plenty of liquidity in the system. The volume has reduced over the course of time, and it has reduced as a result of the reimbursement of TLTRO, which is now completed. It has reduced as a result of the discontinuation of reinvestment under the APP first and under the PEP second. But despite that, and the fact that our balance sheet reduces on a monthly basis, regularly, predictably, the volume of liquidity in the system is still north of 2 trillion euros. So to talk about limited liquidity in the system, I think is not the appropriate characterization. There is still plenty of liquidity. Added to which, there is probably more liquidity in the system than we had anticipated, because there has been less demand for banknotes, and that has an impact. And there are other technical reasons caused by the fact that governments eventually moved their own reserves away from the central bank to put them to better use somewhere else, which has, as a result, increased the volume of liquidity out there. But liquidity abound. Thank you.
Next question goes to Carlo Boffa of Politico. Carlo, please.
Hello, good afternoon. Thank you very much for taking my questions. I've got two. First one, the EPP lawmaker Fernando Navarrete, the parliament point man for the digital euro, told Politico in an interview this week that the digital euro is a nuclear threat to force banks to act. Do you agree with the statement? And the second one is on the strategy review. Some analysts say that the bar for QE is now higher. Do you agree with this? And do you think it will have any influence on next year's assessment of the operational framework? Thank you.
Thank you for your very prospective question. The latter one I'm not going to address, actually, because you are jumping ahead. We have a review of the operational framework that will come in due course in 2026. So we'll take those matters as they come. The operational framework has been approved a few months ago. Let us just see how things work, draw conclusions from that, and then we shall see when we reassess in due course and in due time, that is in 2026. Now, on your first question, I have a pretty simple understanding of what the digital euro is. And for me, this is the digital expression of cash, right? I mean, we all have cash. Well, most of you, I suppose. I do. I like cash, whether it takes the form of coins or banknotes. This is cash, and this is central bank money, if you will. It's sovereign money. But as technologies evolve over the course of time, and as the preference for payment evolves as a result, we need to respond to the demand of our European compatriots. And I see digital euro as the digital expression of cash. It's like digital cash. You can argue at the margin that in terms of, absolute privacy, we're not exactly on the same page. You could argue that the cost of cash is higher than blah, blah. But in essence, that's what it is. So to argue that digital cash is a nuclear bomb, I think that's a little bit over the top. We're not holding nuclear bombs in our pockets, as far as I know. Thank you.
And the last question today goes to Mario Savova of the Bulgarian news agency BTA. Oh, I thought you had raised your hand, sorry. Okay, well then it goes to Marta Pilar of Econostream, please.
Thank you very much. Good afternoon. Thank you for taking my question. Madame Lagarde, what do you think of market expectations calling for another cut, independent of when it is, especially given that the June projections already incorporate one more cut? Thank you very much.
Well, thank you so much for your question. Markets do what they have to do, and we do what we have to do, right? So what I said earlier is still valid. We are in a good place. We are well positioned to deal with turbulent waters and to deal with the risks that will develop over the course of the next few months. And I'm here referring particularly, but not only, to the risk related to tariffs. But you can include geopolitical risks as well. You can include a vast uncertainty, which might partly clear as a result of whatever tariff certainty we receive. So we are well positioned, we are in a good place. We have essentially closed that disinflationary cycle that we battled over the last months and which has led us to move from 400 basis points to 200 basis points with 8 cuts in a matter of 9 months. So we are in a good place now to hold and to watch how these risks develop over the course of the next few months. And we will have a new projection in September, and later on, we reassess at each monetary policy meetings. We do projections and we publish them on a quarterly basis, but we do that on a regular basis, and we will continue to do that in September, in October, in December, and on and on. And it's on the basis of that work that the Governing Council will decide what is the appropriate monetary policy stance. So I cannot tell you much more than that because it's been repeated twice in the monetary policy statement. I've tried to avoid repeating it too much, but our collective determination is, number one, keep inflation at 2% medium-term target. Number two, operate on a meeting-by-meeting basis. Number three, be data-dependent, and there will be plenty of that in the coming months. And not have any kind of predetermined rate path. Some people would like it. I understand that markets would like to have, more anticipation of that possible rate path. No, that is not possible under the current circumstances. But, as I said, we are well positioned to wait and see. And with that, I wish you all a nice wait-and-see holiday. And I hope that you take time to rest, enjoy family moments, friend moments, and have a good time in this uncertain world. Thank you so much.
And we will be back on 11th of September.
There we go. Fantastic. There is the ECB report. We're going to come to comments and questions and then go over to our main event very, very shortly. We've got a big one coming up today. It's really exciting about XRP and Bitcoin and the yen carry trade, all of that. I'm covering all of that in just a few minutes' time, just wrapping up my short, brief comments on X. Let me share with you over here so you can actually go and comment on the latest points. I've broken it all down for you, so you've got everything broken down. Let me show you what I've been doing during this live stream for everybody. So if we look over here, refresh the screen. During this, I have some key points, very important key points. There was one question here: is the ECB concerned about a nuclear bomb? I thought that was great. So I covered that, copied that. That's already out. You might want to react to that. I've just got a little snippet there taken from the show. You can see here.
Respective question. The latter one I'm not going to address, actually, because you are jumping.
Nuclear bomb. And I've got a few other questions that were asked. If you want to break these down and debate them, this provides information and debate. If you want the link to my X account, I'll give it to you there. So I create posts during the show, just little short snippets, answer questions, and people can then weigh in on the debate and so on. I thought this was the best one, though. I really did. I thought this was great when he was asking about a nuclear bomb. She says here, let's just go to it.
And in due time, that is in 2026. Now, on your first question, I have a pretty simple understanding of what the digital euro is. And for me, this is the digital expression of cash, right? I mean, we all have cash. Well, most of you, I suppose. I do. I like cash, whether it takes the form of coins or banknotes.
I'm going to post that there. ECB. Don't think digital cash and the Trump Genius Act is ECB. Let me just put that there. ECB don't think digital cash and the Trump Genius Act is nuclear. That was great. Get some reaction from that today. There you go. Nuclear bomb. Must watch. Whoops. There you go. XRP. Ripple. Whoops-a-daisy. Ripple and BTC. Bitcoin. Okay, there we go. Let me just put that out there. I'll repost that. Okay. Right, so let's come back to our next event. As you can see, my portfolio is up today. I'm beating the S&P. That's because I bought very heavily into XRP and Bitcoin last night, and I'm going to explain to you why I did it in the yen carry trade XRP special. So it's not supposed to go live for another hour. That finished a lot earlier than I thought, but I'm very happy. The portfolio is very green. I've outperformed the market today, which is very nice. So let me do that right now. Let me zoom this out and send you all over there. This is the next event I've got. I will come to comments and questions in a second. This is the event we've got coming up in a minute. My XRP, I bought big, 550 billion investment. It's scheduled for 54 minutes. I'm going to reschedule that for 9 o'clock in 20 minutes. So I'm going to bring that forward because that ended quicker than I anticipated. So let me make sure that I've got it set. Next, yes I have. Next, yes I have. Let me go and change the time. The time is not good enough now. So let me just edit that. And we'll go live at 9 o'clock. There we go. In 20 minutes time. There's no need to wait all that time. All right, so there we go. That's scheduled. So what I'm going to do now is send you over there and have a quick cup of tea and get ready for that big event. So what I'm going to be talking about on this show is why I bought heavily into XRP and Bitcoin, where I see the yen carry trade unwinding or not, why I've got extra super mega bullish, I call it actually, and I'll explain why I've become mega bullish on that. So let me go to comments and questions first. Have we got any comments? Are we in members only mode? How many people are watching? Let me just see, and then I might need to go to members only. I want to answer everyone's questions. We've got 372 people, not too bad. Let me switch to members only for a second so I can answer everyone's questions. That way I don't miss anyone. So let me just switch over to members only. If you've got a comment or a question or something you want repeated now about anything at all to do with the show or anything whatsoever, just mention it again now. There you go. Members only. Now I can see all your comments. All right. So please repeat them. Zach say, yes, we just had the bell. I mean, they don't want us using Bitcoin, but they want to use the blockchain tech for the digital euro. Sounds like a confession of weakness, says Star Blaster 1. We are all positioned to deal with turbulent waters. Is that because you're manufacturing them, Christine? Says Say Ray. Last round of drinks. It means start drinking. Wait and see. Don't know anything. Need more info. Wait and see. Same thing over and over again. React to that. Pardon the pun. No bell. Well, I did ring the bell. Yes. But we can't do two things at once. But I kind of did. I still rang the bell. Morning, Martin. Okay. No comments and questions at the moment. So what I will do is I will go through our bell situation, end the stream, send you to the next event. So let's do that right now then. Here we go. Let's just turn the music down a little bit and do our opening bell as we would normally do. Here we go in 3, 2, 1. Let's go.
The year is 1991.
Our overall positions this morning. Let's go through it all live on the show. So the overall portfolio is up today slightly. Not a great deal. The S&P is up less. I'm up more because of my crypto position. I'll explain shortly. Virgin Galactic down 1.35 in the midst of a short squeeze. We've got Palantir down. Okay, I think we are back. Hopefully we are back now. We just had a glitch, but hopefully we are back up and running. I wonder how many of you stayed with me. Let's see. Let's go back over to my main portfolio. We had a break in service, but we should be back up and running. Just double checking. Yes, we are. Let's see if anyone is with me. Let me go through all my tabs and refresh them. We had a break in service. I've recently upgraded my service, and I think there's still a few glitches in it. and we did have a break. So I'm just going to go through and refresh everything. Let's get everything back on air. Yeah, I think we're back. Is anybody still with me? Let's have a quick look. 113 of you. I lost a third of the audience, but I still seem to have 113 of you, which is nice. Thank you. I think that's up and running now. I'm just going through my screens to make sure we are all good. Just give me a few seconds to refresh all of this. Just stand by. I'm just going through all my systems to bring everything back up to scratch. It should be streaming now. Yeah. I think we're back again. I apologize for the inconvenience, but I think we're back up and running again. I'm just going through a few things. Just takes me a few moments just to get everything squared away. As you can see, it's an amazing day. Got to reset my passwords everywhere. Let me make sure that's all good. Okay, we've got that back. I think we're back there. Okay. 185 of you with me. Sorry about that. We had a break of service. I'm just going through, I have to go through thousands of screens to make sure everything is live again. I know it's a bit of a pain, but it's got to be done, I'm afraid. Why is the extra channel doing that? That seems strange. That should be working. Not going to worry about that for now. Just going to end the extra channel a minute. Switch account. Just bear with me a few seconds. We've got our next event coming up in a moment. That will still go on time. Not going to change that. Switch account to the extra. Let me just end that one there. Live. It says I'm running live. Bit weird. Okay, let me end that stream over there. All right, just bear with me. I'm just making a couple of adjustments to the extra channel. And we'll reset that. But it's a very good day today if you stayed in the market. I'm going to explain exactly why I did this. So I'm going to reset the extra channel and I'll be back in just a few minutes' time. Reuse that. Right. Okay. This is the extra channel. Go live now. Yeah. Set that up. Let me go through my positions in a minute. Yeah. I bought XRP and Bitcoin overnight, and you can see my S&P, just the S&P is up 0.17 and I'm at 0.22. That's because I bought heavily on XRP and Bitcoin last night. When everyone dumped it, I thought, great, thank you very much. I'll take it. Let me make sure that extra channel's now working. All right, that's now set up and running again. So what I'm going to do now is I'm going to take a 5-minute break. maybe 10 minutes, actually. I'll just reset. I'm going to have something to eat because I was just about to eat and then I had to take care of all of this. So I want my breakfast and I'll come back with our XRP special. So I'm sorry it's been delayed, but we are back on the extra channel. That's running. And we are here with you on the main channel. So we're all good now. Let's see how long it lasts this time. I don't quite know what's going on with my systems at the moment, but it's always the same when I upgrade something. It happens. There you go. Extras all good. Feeds are all good. All right. So thank you very much for coming back. I'm going to just change the time of the next event. Just give me a chance to have a cup of tea and my breakfast. Put that back onto there. There we go. So I'd set it to go at 9 o'clock. I'm going to do 9:15 now, just to give myself 15 minutes to have some breakfast. I'm starving. Let me do that there, 9:15. Okay. You've got the link at the top. This should be the right link. Let me just double check. It's the right link. Yes, it is. Okay. So I'll give it to you again. Just so you have it in the chat. It's pinned to the top, but just in case you can't see it, some people say they can't see it. If you can't see those links, you just have to go live chat rather than top chat, and then it will just reveal it to you. So here's my XRP event. This is the one I'm doing. There it is. That's in a minute. I've just rescheduled it for 20 minutes. Let me give you the link in the chat. There you go. Just got to refresh that. There you go. Okay. There you go. There's the link. So I'm going to end the stream now. So you came back just so I can end it, but I wasn't able to end it properly and send everyone to the next event, which I can now do. The extra channel is running perfectly. We're playing our Mobix event from yesterday, if you want to listen to that. I've got the CEO just joined me. That was a very, very important day. And Mobix, if you noticed, popped on the... it popped on the news of the CEO. If you all missed that, with that massive rally going into the interview, it popped up like 50%, 80% when I announced it, and then we had during the interview it sold off. Buy the news, sell the rumor, and then when he answered that great question, it popped up again. And it went up again, and now we're doing really nicely. So Mobix is having a bit of a rally, and there you go. The interview was very popular. Okay, that's it from me. Thank you very much for coming back. I really appreciate it. Thank you. What's for breakfast? I don't know. Might have some porridge. I love porridge. Right, I'm out of here. Thank you ever so much indeed. I apologise for the break in service, but we should be back to normal again now. I will leave you and I'll be back in 15 minutes. So as I click the end, it'll take you to the next stream, or you can click on the top. This is the event, XRP special, Bitcoin, why I bought heavily, why I'm more bullish now than ever, and see if you agree with me. All right, I'll see you back in a bit. Thank you for your support. How many people came back with me? Let me have a look. 226. There we go. We've got most of you back. Thank you. See you back in a bit. Take care of yourselves and each other.